Good morning, guys. Welcome to this Tuesday, April 22nd. And yesterday was one of those days where you're like, oh my God, the whole thing just went sideways on us right from the get-go. Now in the overnight, and I have to say in the before the close yesterday, we had a pretty good run up here. And then you see remember I was talking about these single print e-prints with a split out end period here from yesterday, as to show you. Do you remember those prints I talked about? A three-letter ledge in the wrap in the 51.75. If they start taking that out, we started off range bound. So well, that's exactly what happened. A pretty freaking spectacular run up, really late in the session, right up to the end. The bargain hunting, people picking up stocks right there. And so pretty much starting off range bound, and then the overnight as the reopened has been pretty much a straight shot to the upside, pretty much reversing the whole day yesterday. So okay, we'll take it. So it just tells you how volatile it is, and it's I don't think it's so much it's running on headlines at this point. It's running on trade desks, which are I mentioned that the other day. Uh, how these trade desks that are selling, buying ETFs, baskets of stock, have the ability to front run that and really add volatility by they sell the stocks, then they sell the ETFs, which has to sell the stocks, and then they buy them back to stocks. And so it's just a massive churn machine there, and they always make money on it. You can see how these bank earnings came out. The big shiny star in their bank earnings was all about trade desk earnings and trading, and that's exactly what they do. So that's kind of an unfair advantage. You have a trade desk who's going to execute, and they know what the order flow is coming in, so they can actually kind of front run it with their own trades. So I wish we had that kind of information, right? Anyway, so news this morning though, before we keep going here, we have a bunch of Fed speakers at 9:30, and 1:40, 2:30. The only piece of news really is the Richmond Fed at 10 and the 2-year auction at 1. So that's about it for today. So not much news to drive the market today. 10 o'clock is, I think, the only one really to pay attention to. There is always the opportunity or possibility for headlines coming out as they announce a deal or do something. You never know when something starts, when you hear something and it becomes a violent reaction in the market. So always be prepared for that. Now the overnight retraced pretty hard right back up here to these upper levels, 5250s, then backed off a little bit. But I'm going to start off range bound at this point. After yesterday's big sell-off and then complete retracement, it could go either which way. We could see another leg lower. We could see them retrace further to the upside. We could see them just go sideways. I think the market is just in a spot where we need to give it a little bit of room and just let it do its thing. For us, just be prepared as long as they hold below that 5300. I would technically stay on the short side of this on the capital flow side. Starting off the day range bound on the exchange member chart. If they can get up about at 5300, I would be a little bit more positive on the long side. But at this point, pretty much starting off range bound. Looking to sell strength up to that 5250s. Looking to buy weakness down to the low here at the 5170, 75s. And then see if they can trade out of this range. But that's pretty much where I'm at right now. So looking to get short, as you said, looking for short opportunities against that 5240s, the 5250s. And on the way down, looking to buy against the 5200s, 5195, 5180s, 5170s for rotations back up. It starts trading below 5170s, bets are off, we're heading lower again. And I would probably be maybe a little bit more aggressive. You had the mode here on yesterday, 5180. Starts trading below that one. I would start thinking about the short side already. Probably already below 5200, you know. In all fairness, you have these single prints. This is a pretty light. The beginning of the overnight, they popped up pretty good. But a lot of the volume is right here at the 5200s. So I would probably start thinking about the short side already below the 5200s. See if they can hop on it, see how far they want to run it. Still looking though to buy against these lower areas, and if they take out that very low at the 5170s, then bets are off and just gonna stay on the short side at that point. So this whole area right there below it, I'm going to look for weakness, see how far they can take it on the downside. That means you can take short trades on the way down, as they just don't sell into the support areas. And as you hit the support area, look for buying opportunities as to see if they're going to be able to hold that area or not. So that's kind of the dynamic there. But at this point, that's kind of where I'm looking at. So, and you can see already when I drew out this edge, I already probed here below this edge here. So I could adjust it, but I'm just going to leave it as it is because this probe here could just easily change on me as well. I was looking at this edge. There was a this overnight edge from the before the London session, and right here below that big ledge on the overnight. Definitely an area of support, but let's see. Right now it's going to be right now they're trading right there, so it could be either. But as they were down here, it became as they were coming down here, it was support, and now if they start taking it out, it's just going to turn into resistance for us. So above that 5250s, I would be staying on the long side a little bit more aggressively and seeing if they can retrace this even further. If they can get up above, you can see here we have a couple of days where they ran down here and tested this low at the 5250. So it's a pretty good area of support, and if you can get up above it, and it's really this whole area right here, right? So 5250. Let me see here, right here. So between that ledge right here and this upper edge at 53, so this whole area congestion is going to be important. If they can clear that one, we may be back up here in the spot where we can trade this higher. But as you can tell, you don't need much. The market, not much news to drive the market yesterday, and they were just in a shitty mood, and the whole thing started heading south, and there was just no looking back. So once the pylon effect kicks in, and there's not a lot of, I think a lot of retail people are sitting there shaking in their boots. If some people never experienced stuff like this before, and they just had no idea what to do. And the last thing you want to do is just sell everything at the lows here, because right now, this time you want to actually pick up some of these bargains, because a lot of these big tech stocks are they've been creamed. They're down at prices beginning of the year is like you could just dream of. So that's where we start, looking for early strength, looking to get short against this 5240s, 5250s for rotations back down, looking to buy against the 52, 5190, 5185s, or 5180s, 5170s for rotations back up. Below that 5200, I would be looking for short opportunities as well on the way down. So that's my starting point. Let's see how this whole thing develops. Looking at oil and gold. Looking at I was thinking about gold because they've been moving like crazy. They're up to 3,500 in the overnight. Crazy moves on gold. Absolutely nuts. And it's starting to feel very bubblish on the gold side of things. On the bond market, though, before we keep going, so bond market back up again, holding. They looked like that 112.30 held in the overnight at least, and they're trading back up. So that's a good sign. And as long as that ledge holds, we are probably in a spot where we can trade back up here to that 114 attractor area. So, and what I'm looking at there is really the I had to grab my capital flow on the bonds real quick. So this big ledge right there. So if that comes out on the way down, bets are off. I think we can head all the way down to the 111.15s, maybe even test the lows at 110. So this could be a one of those things where it runs down pretty hard. So, and it's anyone's guess. If they can hold this support area, we can certainly trade right back up into the 114s and potentially get back into this attractor area. So we'll watch that lower edge. If that comes out, that's not going to be good news for the bonds. The yields are going to be higher. Bond price is going to go lower at that point, and it's going to be potential more headwinds for the market. So that's the bond market. Starting off looking for a retest of this low though at 112.30. So looking for weakness to retest that low. And if it holds another day session right now, and then maybe have a good spot at taking this back up again. But I haven't been trading bonds either lately because it's been fairly volatile, and it requires a different degree of patience to trade that market. most of the time you just get stuck twisting in the wind for a long time. Anyway, the Nasdaq though, that's the one that staying hopeful of at least for now. They have the big seven, the magnificent seven. They are hammered, absolutely hammered. And made below $500, down in the 480 range, and they were trading at 700 like a few weeks ago, right? So Amazon, uh, Microsoft, they're all hammered, right, way down. So they're adjusting price wise in a big way, and there's nothing has fundamentally changed with these companies. A lot of them are very um, insensitive to these tariffs. So there's no reason for them to trade at those levels more than the market has a reason to hammer them, you know. So that just tells you that there may be some opportunities there. But to get started though, starting off range bound, the same thing on the Nasdaq. And they have retraced the whole day session from yesterday. We're back up here at the 160s and holding actually pretty close to it. What I'm looking for here is really them to take up, trade back above that 350, 360 area. This is the volume edge on the way down. Once that came out, everything kind of went to shit for us. So, if they can scratch up above that one, I think I would be more positive about the long side of the market. But at this point, range bound trading, looking to sell strength, 120s, 18 160s for rotations back down, maybe up to the 190s for rotations back down. Looking to buy against the 18,050s, 980s, 17,920, and the 17,870. Again, on this big ledge right there, and overnight spent a lot of time here. If that 970 comes out, I would be more inclined to lean towards a short side, still looking to buy against these lower areas. So same as the analysis as on the ES, right? But I think that ledge, the 970 here, 17,970 comes out. They can certainly take this lower. I would still be looking at buying against that 920 and the 870s at that point. So that's where I'm at on the Nasdaq. So structurally, pretty much the same as the ES, different levels. If they can head up above the 160, I'll give it one more level up to the in 190 to 200s. If they can start, I would start thinking about the long side and see how far they can take it. And above that 370, if they get up that far, yeah, then I think we have a good rally on our hands. But at this point, it's anyone's guess where they're going to go. Not a whole lot of news to drive the market, and it's really jittery. It just means that if it's jittery like that, you just have to be really cautious and then let the market stop you out. I did a trade mistake on a different account yesterday. Clicked in a bunch of orders by mistake. It's like if doing something and realized, shit, I have the wrong window is selected. I was in 5 contracts on the Nasdaq in the wrong spot, and I was like, okay, so. That's the only thing you do then is just tighten up your stop and see if you can work it out. And then I just ended up with a small loss on that one. But you just have to be, make sure your stops are in and you don't have you don't mess around with it too much. If you're wrong, let it shake you out and you take a small loss instead of getting stuck in a move where it really moves against you. Because you never know. You never know when it starts happening. You get yourself into that mode of trying to repair a trade too hard. It's just going to crush your account. So today, in these times, you don't want to mess around with it. You don't want to be too cute about it because it's just way too volatile. Oil and gold. Now, gold, I just did something on gold. I crunched it, I compressed it a little bit further. I aggregated it 10 ticks now. So now my aggregation on the profile here is now 10 ticks. So I went from 8 to 10. It's just getting too stretched. And now you can get a little bit better picture of it. But you can see here how gold took off from the 3400s and they're up in the 35, $100 up in the overnight. So it's going in a 50 to $100 clips right now on the upside. I think that's a little bit crazy. So I'm just waiting for one of these big down days. It could be very well that it's repricing. Right now, I'm starting to feel like it's a crowded trade that everyone's piling on gold because it's going higher. So it just drives it higher by default, which in turn turns it into a really volatile trade because now you can really turn on you. I haven't traded gold or invested in gold in that way at this point, just because it's yeah, I'm not chasing it up like this. So 30 we were trading here at the 32.50 for a bit for a few days, and then it started taking off it. That was a few days back, and look at that thing, 34 of 32.50. We're 250 bucks up from there. The stall for it's just short at 33.50, and now in the overnight. Yesterday we had a pretty good up day, and then the overnight just took it one from 34 to 30. No, 33.40 to 34.40, and then from 34.40 to 3,500, and then that's where we start. So gold at 3,500, guys, crazy. The trade is from the long side of the market. Still look for potential retracement trades. They could certainly be pretty violent ones at that. So I'm going to be on the side. I was looking at this last night, thinking I would maybe hop on a trade on gold, but it was so volatile. I figured like, no, that is crazy stuff. And when it's too volatile, I mean, you have to just, with everything else, trade with a much bigger stop and be prepared to get shaken out. So just get the losses just get big when you do it that way. So and it doesn't need to be. You can be right on a trade, and this is the most frustrating part. You can be right on the trade. Your trade location gets you knocked out, and you just see it run away from you. It's like, oh, they just got me, and then you're sitting there with a loss, and it's going in your favor. That's very frustrating. So I mean, and that just gets you into that mindset of trying to get your money back, and yes, it's just not a good thing. So just be mindful about the amount of volatility you're trading in. But on gold, I would be looking at buying against that 34.60s, 34.55s down to this 34.40s for rotations back up. They already retraced pretty good back from the 35.10s here. I would be looking for shorts against the 34.80s and the 34.90s with a lot of caution. So I would favor the long side all day long. Just be mindful that if they start taking out one of these lower areas, the 34.50s, let me see here, the 34.40s here, I would be looking for a potential retracement trade. And again, it could be pretty violent. But that's what I'm looking at. We'll see how that materializes. Let's see. Yeah. And then oil. So gold, I'm probably going to sit on the sidelines. But I mean, if I try to make this bigger, you can see what that looked like here. I can't even do that. Let me do this. So this is what it looked like going into yesterday. And get it in there. Yeah, look at that. Look at that rally up here. So I was looking at this whole rally up here. And I was looking at it. I was looking at it late though. I was looking that catches your eye when it's way down into it. But look at that move to the upside. Big move to the upside. And it's just, yeah, okay. You're too late to that. So now they backed off and they're just going sideways at this point. So that's where we are on gold. It's one of those things you just had to be really cautious about. In good market to trade if you're looking at volatility, but once it stalls, it just doesn't go anywhere. But trading from the long side of the market to get started. That's the way I would do gold. And oil is going sideways. Not much activity on oil lately. It's steadily going lower. All the policies are geared towards taking it down. I heard someone talk about $55, $65 oil for 25, and then maybe even lower in 26. So we'll see how they pan out. But everything is geared now towards lowering energy prices, and that's going to be driving oil prices lower. Not in a straight shot, as with everything else we do. Nothing goes in a straight shot down. But I would start off range bound on oil. Watch that upper edge at the 63.80 to 64. Trade above that, look for a retracement up to the 66s. And otherwise, I would just stay in the range here below, buy down to the 58s. Look to get short up to the 64s, and then just work this edge with this range. It's a little bit wide here on the F1. It's like a $6 range. But at this point, you're kind of up against that upper area. So 63, I would look for short setups against 63.50s, 63.80s, up to the 64.20s. And I would look for long opportunities against the 63s, 62.70s, 62.40s, 62s. The last one would be 61.70, but you trade back down here to that 60, close to that mode, you're probably going to be that's your attractor on the downside. So when you get down here to 161, you're going to be less aggressive buying this, just because at this point you're back to an attractor area. So you're looking for short setups against these upper edges for rotations back down. Early on, I would look to buy at least against the 63s, 62.70s, 62.50s, these three support areas for maybe a rotation back up. Below that one, I'll still be looking for buying opportunities, but not as aggressively because it's heading back down towards its attractor at the 61s. So that's oil. And not going to spend too much time on oil because this has been pretty range bound lately, so not much happening on oil really. Gold, ES Nasdaq is as the one moving. A lot of opportunities are setting up there. It just have to be able to deal with that volatility, you know. So far, the overnight is at 250. And remember, this was used to be on the micro ES used to be a million contracts here on the ES. So we had like one fourth of the volume right now versus a couple of weeks ago. And the full size is at 163. So that's still very reasonable. So it's volume wise, we're definitely coming down. When it comes to volatility, it's still very much there. You know, so these bars are still huge. This last bar, 22 up to the 28, 6 points. Yeah, so definitely still volatile. All right. So on the ES and Nasdaq, starting off range bound, watching that upper edge on the ES at 52.50. The lower edge is 5200. Below that one, I would be looking for potential short opportunities. On the way down, still looking to buy against those lower areas. But if they take out that 51.70s, bets are off at that point. So that's how we get started. Let's see how this whole day develops. So good trading, guys. And then we'll see how this whole thing shakes out. All right, guys. I'll see you back at 11:30 for the next update. Later.